Good afternoon, everyone. The session today is a paper by Arindam Das Gupta. The paper is titled Some Problems with the Indian Goods and Services Tax. Now, I must congratulate the organizers for getting me to chair this session because I'm meeting Arindam after 25 years. And I had to ask someone that, what does he look like? As far as I can remember, he looks a bit different. But anyway, he's a very old friend whom I've lost touch with. So thank you, organizers, for putting that straight. He holds a PhD in economics from Cornell University and had faculty positions at IIM Ahmedabad, NIPFP in New Delhi, the Nanyang Business School of the Nanyang Technological University in Singapore, IGIDR, Mumbai, and the Lee Kuan Yew School of Public Policy of the National University of Singapore. Since 2010, he has been at the Goa Institute of Management in Goa, a public policy-oriented microeconomist. He has published extensively, particularly in the area of tax theory and policy. And in fact, that is how I came into contact with him the first time. I had a student who was working on tax policy. And in fact, Professor Das Gupta was kind enough to provide very, very nice inputs into that dissertation. Well, I mean, there are all kinds of other things that he has been doing. People at our age have been usually doing a lot of things. They're all there in the thing, and so I don't want to take into much of your time. So, Arindam, please go ahead.
Thank you very much, Anjan, for that very kind introduction. And I thank the organizers, A, for inviting me to give a talk, and B, for putting Anjan as my chairperson. Okay. Let me just introduce this talk very, very briefly, and then I'll proceed straight to the presentation. The goods and services tax was introduced in the Centre States only last year, April of last year. So it's too early to do a proper empirical evaluation. And also, if one tries to bring into account the supposed properties of goods and services tax, taking into account second-order theoretical effects, it's way, way too early. So this is not an academic talk in that sense. It is not a post-mortem trying to evaluate how the goods and services tax has done. What it is it tries to make very briefly, tries to say, okay, this policymakers, you seem to have made a big mistake introducing the goods and services tax, and here is some suggestive evidence of that. And I'm going to talk about 5 different kinds of evidence. And let me just, I've deliberately taken the abstract from my paper and dumped it in my first slide. So let me go there first. Okay, so this is straight cut and paste from my slide. Objective of this essay is to examine and explain possible drawbacks of the goods and services tax introduced in India on July 1st, 2017. To get a comparative picture of its vulnerability to tax evasion, data on evasion from OECD countries is first in the 1990s presented, and data on an earlier VAT in Indian states done by the Controller and Auditor General in a report they released in 2011 is also pointed out. For those of you who don't know, goods and services tax is a VAT, a value-added tax, except that compared to the India's and many countries' earlier goods and services tax, the GST's tax base is goods plus services. Earlier on, India had a state-level tax on state-level VAT on goods alone. Okay, so so I look at these 2 pieces of evidence, one historical, one cross-section geographical, and my tentative conclusion okay, buttressed by recent stories that are coming out in Indian newspapers, is not at all encouraging. The essay goes on to raise doubts about the suitability of the GST for India altogether, using some theoretical arguments. This is then followed by a look at the complex structure of the Indian GST, which can result in the negative GST rates, though it has not. Okay, then it looks at the examination of reforms of India's central and state GST administrations, overseen by the Goods and Services Tax Council in India. I'll discuss that. And these reforms are still ongoing, okay, despite over a year having elapsed since the GST was introduced, and some key pending reforms are identified. None of this is very encouraging. So I'll just repeat what I just said briefly in an outline form. VAT GST evasion in OECD countries, VAT evasion in Indian states, major methods of GST non-compliance and comments relating to India. And here I'll point out what seems to be a major defect in the grasp of our policymakers on how GST can be not complied with. Suitability in the more theoretical argument of the GST for India, deficiencies in GST design, problems with GST administration, and that's about it. Okay, so let's start with evasion from the 1990s in OECD countries. So I've got listed here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 countries. I should talk about briefly what the VAT gap is. The VAT gap is the proportion of an estimated potential VAT computed by standard methods that is not paid. So, for example, in the Netherlands, it says that of the theoretically possible VAT that could have been collected, that is the potential base, Netherlands collects 97.6% of that VAT, and doesn't collect about 2.4% of that VAT. The numbers keep increasing, and finally, when you get to the pigs plus Belgium, Portugal, Greece, Spain, and Italy plus Belgium, you have evasion rates, the VAT gap, the VAT evasion, ranging from the high teens, 14, all the way in Italy up to 34%. So, first piece of evidence, even in better managed countries, okay, there seems to be a fair degree of VAT that is evaded. Okay, then let's come to Indian past. The VAT on goods alone in Indian states. There's something called the Empowered Committee of State Finance Ministers, and they released a white paper as to what a good VAT administration should look like. So, using this as a template, the CAG looked at VAT administration in 26 states, okay, and they concluded that VAT administration in all of the 26 states had more or less problems. There were the deficiencies in the drafting of the VAT Act, which is done state by state, and the rules for implementing the Act in many states. There was a large backlog of pending assessments to the predecessor tax that the goods-only VAT had replaced. There's incomplete automation, limited electronic return filing, and differences in VAT returns and documents across states, handicapping cross-verification of, say, the seller side of the transaction and the buyer side of the transaction, even in the same state, let alone in different states. There's inability, unwillingness to cross-check information available with other tax departments like the Central Excise or Customs departments. There are ineffective procedures for verifying input tax credit claims and detecting fake input tax credit claims. The novel feature of VATs is that you pay tax on output and get a credit for taxes that people who have sold inputs to you paid on these inputs. So this is called the input tax credit or ITC mechanism, which is supposed to be the big thing about VATs, including the Indian GST. Okay, most states were without tax administration procedures manuals. Okay, I don't know how states could even dare to do that. When in my normal activities as a professor, we have to repeatedly refer to manuals. Otherwise, you don't know how to do things correctly and transparently. And these guys were managing. Many of the states did not even have VAT manuals. Okay. And some states that did have procedure manuals had incomplete procedure manuals. Then there were problems with VAT dealer registration. VAT is paid by what are known as VAT dealers, the taxpayers who pay VAT, called VAT dealers. Problems with how dealers were registered, allowing non-registration of some dealers and multiple registration of other dealers, fake registration of other dealers. The penalties for VAT, even though they were laid down in most law books, ended up being discretionary in the hands of the tax administration, and the CAG found a number of cases where you could be happily evade your VAT taxes and not be penalized. So this litany of ills resulted that in some states, many states, VAT, the goods-only VAT was about 50% of that or more was evaded. So there's huge amounts of evasion in the earlier goods and services tax, goods-only VAT. So why are we implementing it? So now the third, let's talk about defects in India's design of the crimes it recognizes. First, a quote from Michael Keane and Smith. Okay, what Keane and Smith say is, the case for employing a general commodity tax in addition to an income tax must largely turn on administrative practicality and enforceability. So if an indirect tax is not well administered, it's not worth levying. So let's look at some channels of evasion, and in particular, we'll end up looking at a channel of evasion that the OECD thinks is important, but India does not. So most broad-based taxes, there's a common set of evasions: underreporting of sales, failure to register as a taxpayer, misclassification of sales to attract a lower rate of tax in case there are rate differences, omission of deliveries for own consumption and investment. So you're the buyer and the seller, but the seller and you being the same, you don't bother to report those sales. Tax collected but not remitted to the government, not reporting income and reselling these goods domestically, using fake documents and records, and high VAT rates, multiple tax rates, low registration thresholds, and widespread tax exemptions. Okay, this is for all broad-based taxes. For the GST, there's something else that comes in because of this GST having input tax credits. So GST paid by the input supplier can be set off against tax paid by output selling dealer, as I've already said. To do this enforcement properly, you have to get purchase imports from this purchaser and sales invoices from the seller, and you have to match these. So you have to have a system to cross-match transactions across dealers. Okay, and if you don't have a proper matching program, you'll get very poor this ability to enforce cross-match sales. If tax, then you come to the subset of this, which leads to a high degree of evasion. Under goods and service tax, if a good is exported, the exporting state levies no tax on that good. It is the destination state that has the right to tax the good. So what happens is in something called carousel fraud, the dealer importing a good into a country pays no tax, but then sells it to another dealer in the destination country, claiming that it's tax paid. And then it hangs on to the tax, it doesn't remit it to the government. Ultimately, from the destination state, the good is exported out of that country. When it's exported, there's zero rating of exports, there's no tax on the exports. So the entire amount of tax is not paid, the government being defrauded. And the same goods can be re-exported to the same destination country and go through this procedure again and get exported out of the country. Okay, and this can happen a third time, and this can happen a fourth time. Goods are just going round and round, evading tax at each stage. And this is therefore called carousel fraud, which is seen as a major source of tax evasion. In fact, okay, in the UK, it is the references in my paper. For example, carousel fraud is estimated to have caused a revenue loss of 2 to 3 billion pounds compared to VAT collection of 6.9 billion pounds this is data for 2011. All right? So, a huge amount of tax is lost due to evasion through carousel fraud. And tax experts in India don't talk about it. There was a paper that talked about it in 2002 by Sridharan, and he discusses what carousel fraud is and he dismisses it. So carousel fraud is not recognized as an important source of evasion in India, and it's not part of the Indian discourse, okay, though it's considered very important in the OECD. Now let's come to one more theoretical argument before going into looking at VAT administration and VAT, the design of the VAT. There's a theorem by Diamond and Merlis in 1971 called the production efficiency theorem. And essentially what it says is to have a tax that leaves production efficient, you do not tax inputs. And that is the rationale for the input tax credit. Okay, the Diamond-Merlis 1971 theorem. Immediately thereafter, Partha Das Gupta and Joseph Stiglitz and Das Gupta in 71 and 72 produced two papers pointing out that the Diamond-Merlis theorem doesn't hold in a whole host of situations. So it's a very special theorem, cannot be used by any stretch of imagination as a justification for real-world input tax credits. Okay, and then there were two examples, one constructed by Michael Keane and Jenny Lichtart, and the other was in a paper I wrote, both of these written in 2005, where specific examples were constructed in which input tax credits, not giving input tax credits, but for in my paper's case, having a cascade sales tax, would give you better welfare, better lesser evasion, better GDP than a situation where you did give input tax credits. So this is a fourth argument, okay, a fourth set of arguments that the tax, okay, may not be the VAT may not be a suitable tax for India. Okay, so now let's just review the design defects in the Indian goods and services tax, administration defects in the Indian goods and tax, and that's about it to the presentation. So design defects. There are multiple rates of tax. If you look at the separate taxes on gold, this and that, the goods and services tax is levied at 7 different rates. The most common ones are 5% ad valorem, 12%, 18%, and finally a 28% rate on the goods and services tax. If inputs are taxed at a higher rate than output, then in theory, this has been found not to be true in the Indian case, then in theory, high rate of input tax credit and low rate of tax on outputs can result in the GST collection being negative. But this is not, this theoretical possibility has not worked in India. And then you come to this thing. The goods and services tax is either collected by states, that's the SGST, State Goods and Services Tax, or the center, that's the Central Goods and Services Tax. And there's a third variety of tax collected by the center, okay, on behalf of the destination state, since they want to preserve zero rating of exports, so they had to put another intermediary in. So what the center does is it collects tax from the origin state and it gives tax to cover input tax credits to the dealers in the destination state, acts as a bridge. This is done so as not to break the VAT chain is the rationale they put. And that is called the Integrated Goods and Services Tax, IGST. So what you have there is two further stages of taxation. It's not just as if the origin state and the destination state lay their hands on a good and that's the end of it. You now have the center coming in twice more and increasing the number of transaction stages to 4. Okay, so origin state gives the goods to the center. Center takes the goods and passes them on to the destination state after making the transfer. So you have 2 extra stages of the of administrations dealing with the goods and services tax. So this leads to inefficiency. In fact, there's a newspaper article a few days ago, and there's another speaker on the GST. He knows more about this than I do, so I won't steal his thunder. I'll just point out what the newspaper article said. It said that what the center does is collects this tax from GST administrations, puts it in some account, and then when enough GST taxes have been, this IGST taxes have been accumulated, it distributes the IGST to the central GST account and state GST account. And since the GST was implemented in July 2017, this has been done, distributing IGST revenues to center and states, has been done only 6 times. So, except for these 6 times, the money sits idle with the center, a further source of inefficiency, and it puts an artificial negative impact on GST revenues. So, the IGST and how it is administered is another source of problems with the goods and services tax. Okay, and there's also, again, newspaper articles, I don't have any data. There's extensive evasion of IGST by importers, because they are also liable to pay integrated goods and services tax on imports. There's something called a reverse charging mechanism that's also there. For a reverse charging mechanism, if you are not a large, there's the GST is only for large dealers. There's a GST thresholds below which firms aren't entitled to pay GST. So if you're too small to pay the GST, then the large dealer will pay GST on your behalf and charge you. This is called reverse charging mechanism. So it increases the burden of dealers that have to do reverse charging. Then GST is not uniform on all goods and services. There are 3 sets of goods, petrol products, alcohol, and electricity that are outside the goods and services tax. 2 of them you will note are basic intermediaries. There's also the dealers below the threshold, so-called composition scheme dealers, are not entitled to input tax credits. Okay, and out of 89 lakh credits last year, 15 lakh these dealers were composition scheme dealers. So all of these 3 goods, of which 2 are universal intermediaries, and the existence of a large number of dealers below the registration threshold, will lead to continuing what's called tax cascading. And tax cascading is viewed as one of the major reasons why introducing a goods and services tax is good, to get rid of cascading. But we are not going to get rid of that cascading. Okay, so now let's come to administrative problems. First of all, okay, what will be the composition and ownership of the GST Council that makes changes to the goods and services tax is not settled. There is an attempt to move, it's now in the joint sector. Part of the GST Council is contributed by large corporates and part by the central government. This GST Council, they're saying, should now be moved entirely to the center, and so the issue is not settled. And some newspaper editorials earlier on said that having the GST entirely in the center is going to be problematic. And the reason why it's going to be problematic is because then there's a fully government body is not that flexible, but a joint sector body can be more flexible and be better at administrating the GST. Okay, how many GST administrations are there in India? I'm not very sure, but there are at least 30. 1 central goods and services tax and 29 state goods and services tax administration. And the level of different state tax administrations, what the CAG study showed, is that different levels of inefficiency, okay, and efficiency. So the states are not on the same page. The center is not on the same page. And if you look at what experience the state governments have in preparation for the GST, what we see is that there was a constitutional amendment that gave states the right to tax services in the run-up to the GST, and that this would be the first time that they were taxing services. So they have a whole new set of dealers to tax for which they have no experience, okay, service tax, service providers, okay, and this also means combining goods taxes and service taxes, a larger number of dealers in total to tax. So huge explosion in the number of dealers that states have to deal with. What about the central? The central tax was a tax up to the manufacturing stage only under the earlier excise and VAT regime. They did not tax retailers and wholesalers. So, central now has an expanded number of dealers to deal with, many of whom they have no experience taxing. They didn't tax wholesalers and retailers. So both the state and the central government have problems in managing their dealers, and there are some facts available, and the other speaker on the GST has something to say of them. Now, as I pointed out in the case of the input tax credit, the important way of dealing with it is to match transactions across dealers, okay? And the CAG found that the cross-matching was also needed in the predecessor goods-only VAT, and a very bad job was done of cross-matching, okay? Then poor computerization means that you had to rely mainly on manual procedures. Right until the goods-only VAT was abolished, there were some states that weren't computerized, okay? And this resulted, as I pointed out before, tax evasion being above 50% in many states. Then one important property of the GST, having a uniform common market for all the states of India, is that there should be no border checkposts. If there are no border checkposts and goods goes from one state to another, they're supposed to be accompanied by what's known as e-way bills. The trucks or the transport vehicles carry these e-way bills and carry these e-way bills, and they show them as required when they move across state borders. Only some states have implemented the e-way bills, so we still don't have a unified common market for the tax. And then there's the problem of giving exporters the refunds. See, when exports are sold, there's no output tax on them. They're what's known as zero rated. But the exporters need to get back the input tax credits that people who were dealers who were supplying them had paid, and they have these invoices. So they have to claim these taxes back. So what the GST Council has devised was a system much like you use Paytm cards, etc., what are called e-wallets. Okay, so the GST Council will credit the money to e-wallets from which the dealers, due to receive input tax credits, these exporters, due to receive input tax credits, could claim the refunds. But the rollout for this has been postponed. So in the meantime, exporters are not getting their money back. Okay, and so they're finding themselves unable to produce enough, and therefore this is having a negative impact on India's exports. Okay, and so to quote somebody from the BBC, a journalist from the BBC, what they said is clearly a successful GST in India will be a minor miracle. So this is the end of the presentation. What I've got here is a series of just comments about the GST made prematurely at the time when the GST is still under implementation. I believe the other speaker, Sachidananda Mukherjee, is also going to talk about the GST, but he'll have some data, has some reasons to believe that it may be the case that the GST will be found to be a failure a few years down the road and have to be scrapped. But anyway, let him discuss those things. Thank you.
We have some time. I think we have a very informative set paper here, and there are some questions I can see. Professor Bhattacharya.
Thank you, Professor Das Gupta, for a wonderful presentation. Let me introduce myself. I used to work with the CAG of India.
Sorry?
I used to work with the CAG of India.
Yeah. Yes.
You can hear me?
Yes.
Okay. I was the Director General, in charge of taxes, when I retired. And I was one of the drivers of the study that you mentioned about 2011. I don't agree with your conclusions. Because whatever studies we make, one important observation in all of CAG studies would be that there will be a lot of tax evasions. It was no different in respect of studies in VAT.
I'm sorry.
And yeah.
I'm not very clear what you're saying.
Can I have it in front?
Hello.
Hello.
Ah,
Yeah, in fact, all the CAG studies on taxes, would come out with an observation on evasion. You find whatever taxes, we had studied, not simply VAT, whatever taxes we studied on the state side, central side, one major observation in all these studies would be the existence of a large amount of tax evasion. Only in respect of customs, we found out they have acted on our recommendations because they have computerized, they have employed technology. So whenever we had raised some objections about some tariff rate, it will be instantly transmitted over the computers to all the tariff stations. As a result of that, their objections will no longer be there in future. So because of deployment of technology, the evasion got reduced in respect of customs. In respect of the other taxes, they remained. And again, a common observation in respect of all tax observations by CAG would be lack of cross-checking of the data across the departments. Now the VAT, the GST addresses both. It employs technology in a big way, number one, and number two, it reduces the scope of this cross connections by integrating different departments and bringing different departments under a single tax. This is number one observation.
may I suggest that you keep your question to one at a time so that makes it easier for him to respond to it? You can come back again later on, of course. You want to take it question by question?
Sure. Yeah, I would prefer that on the. Yeah. The particular study I was referring to was specially commissioned. I forget the gentleman's name, and it was done state by state by different state level teams.
I was in charge of West Bengal of the same study.
Sorry?
I oversaw the study in West Bengal.
Okay. So then you know about the West Bengal's specific study, all right? And you're familiar with in that case, the whole study. But the thing is that you people apparently used the empowered committee's white paper as your base and evaluated the state taxes with respect to that base. Okay? And so whatever you found there was deficiencies in as compared to the empowered committee's white paper. Okay? And then you produced a consolidated report, which is one of the only reports I've seen across states following a specific study. Sorry, I hope that...
We used not only the empowered committees.
Govindo, please, just one. Shoji.
Thank you, sir. You have made my task easier because you have told the audience that there's hardly any data or anything that I'll be presenting will be preliminary. My only observation is that in the very few slides, in the very beginning, that you have mentioned of the VAT gap, and you termed that as a VAT evasion. So I have some kind of reservation of basically saying that VAT gap is a VAT evasion, because VAT gap may arise due to several reasons which may not be the true evasion. Take example of it could arise due to the policy kind of things, that if the policy is not perfect and the practices are not perfect, or if the kind of efficiency is not there, if the tax administration efficiency is lacking, then VAT gap can arise. So terming the VAT gap as a VAT evasion is kind of problematic for me. And second thing that you have mentioned that many of the states were doing the invoice-wise matching of that thing. And I don't know, there are some examples recently came out in EPW what happened in West Bengal and some other state. They did some kind of matching, and how they did and what are the things that is beyond control, beyond the public domain. That is not, we don't understand what they have done, how they have done. But in the GST regime that we will see is that what they are going to do, that GSTR 1, what invoice-wise sales figure that the registered dealers will put up in the GSTN, that will be auto-populated in GSTR 2. That means what you sell to me, and it will come to me. I can see that you have sold to me. So there is a possibility of colluding, and this colluding would be much more easier with the support of GSP. That is my only hypothesis I have right now. I want your views on this aspect. Thank you, sir.
Yeah, firstly, your first question. Okay, if you look at the papers, Keenan, Smith, Baer, and Walpole, from where I did, your general point is correct. The VAT gap is also not only due to evasion, it can be due to other deficiencies as well. But if you look at these three papers, their focus is evasion. So I was following them. So what I've got is, those are supposed to be figures reflecting tax evasion, okay? And not other kinds of losses. Your second point is because of auto-population of GST R2, okay, VAT matching will be facilitated. No, that's not true. Just by auto-populating, you don't establish the existence of genuine invoices. Okay, and to have a proper matching, you need to ensure that the selling dealer's invoice and the buying dealer's invoice are actually exist and entered correctly. Auto-population will get rid of some arithmetic errors, but not the full thing, not all aspects of matching.
Govind. Yeah.
Ronnie, you've done, it's a very well-researched and lot of work you have done in terms of examining the structure and operation of the commodity taxation. And of course, I have at least followed your observations on the earlier value-added tax. Let me make 2 points. One is with regard to the conceptual issues or the desirability of GST itself. That needs to be separated from your observations on the infirmities of the existing GST that we have levied. These are two different issues, because when you are talking about, the general, issues which were raised by, people like Stiglitz, for example. Those are different from the infirmities of the existing GST in India, which is still a work in progress. That's basically the point. I'll come back.
Can I answer this question and then proceed to other questions?
No, I'm yet to come to my question.
Oh, okay.
Okay. The question is in respect of the former or even the latter. I think the comparison as economists we should be making is with the counterfactuals. Just because there is a VAT gap, the question is, what is the counterfactual that you are having? Do you mean to say that the prevailing the earlier sales tax system had a lower VAT, tax gap as compared to the present system? Now, at the end of the day, any change that you do is an improvement over the past. Now, you will have to possibly argue saying that the present system of GST or the proposed GST is inferior. In fact, you see, accountants are different. Controller and Auditor General is an accountant. He basically goes about saying that this is the platform that, comparison that I have, this is the ideal GST, and from there I will make I am talking about the counterfactual that we have to really follow. And in terms of that, do you really think that sales tax would have generated a greater amount of revenue and compliance as compared to the GST that is. As far as the second issue is concerned, the basic problem so far has been of your IGST platform, your GST platform, GSTN. Your platform has predominantly failed because of too many large numbers. And possibly, if you look at the numbers given in the last economic survey by the Chief Economic Advisor, if you keep the threshold at 50 lakhs, for example, you will get rid of 75% of the taxpayers, and then the amount of tax that they pay is just 4%. That is the number that has been thrown up in the last economic survey, if you carefully do it. And if you did that, possibly your GSTN will work, and your auto population and things can be solved. But the basic issue is this. There are a large number of infirmities in the sense that you can't really have so many tax rates and things like that. There is a certain amount of cascading that is there. Petroleum production, these things are outside, but then they will have to be brought over a period of time. These are all issues granted. But the basic issue that you will have to argue is that your counterfactual is better.
Let's come to the first thing. Now, I cannot make a blanket claim that the earlier sales tax is better than the existing GST or vice versa. What I do know is that Keen and Lichtart and I have specific examples with certain numbers captured. And in those examples, a cascade sales tax was better on welfare grounds, output grounds, and this distortionary grounds than a GST, the tax that yielded input tax credit. So I will claim that if I knew India's parameters, then I could make the computation, but this is the time to raise the possibility that the GST is inferior to a VAT at certain regimes, because the GST is still a work in progress. As I was mentioning, Sochi is going to claim, I think, he's going to claim that there's a risk that for the GST, because of its infirmities, is going to have to be abolished. I think he's going to claim that, I'm not sure. So the counterfactual, I believe, I took was the right one. Raise the possibility that the tax itself that we've implemented is not the optimal tax for India. And let others look at it, because it's not an easy job to look at this comparison. And what was your second point? Sorry, I've forgotten.
Then shall we talk about it later? Govind had some questions, I just shut him off. Sorry, there are two Govinds here. I should.
Just Govind will ask the question and then retreat.
Please keep it short because we are getting close to the deadline.
Not 6 times. Not 6 times a year. Six times since July 1st, 2017. Huh? No, only 6 times, most recently in December.
Ideally, it should be 50%, but once it's 40%, the state should be compulsory party, and based on whatever the adjustment takes place, it will be the final adjustments and final transfers will be made. The problem is that the IGST Act does not specify what will happen with the unallocated amounts when the spill over from one account to another. The same purpose was the earlier CS laws. But this is, I think, the most rational way, and the things will stabilize. You had mentioned that there was a large amount of evasion in respect to IDs. It was to check with respect to the EU bills were introduced, and I believe no EU bills were helping check the evasions. Thank you.
Sorry, gentleman's last name was Mr. Bhattacharya. I submit that all your claims are yet to be demonstrated. There is no proof for them yet. Okay. I have not seen any convincing figures. So at the moment, I don't know the answer.
Let's talk about it while we have tea or something.
Yeah.
I just want to add one thing, which, for so far as GST is concerned, has struck me as really very strange. As very strange. You see, no one knows anything about the implementation of this act. I'll give you an example. See, I stay in a cooperative society. We have to pay maintenance charges. The question was whether the maintenance charge was subject to a GST or not. Now, we talked about it amongst ourselves and there were so many opinions. So a commissioner of GST was asked to come and explain. He was a friend of a friend, so he came. There's a big meeting and he explained carefully why we would all have to pay GST. Then he went away. After a few days, another equally important commissioner of GST of a different division turned up and explained why we didn't have to pay GST. Now, it's basically a toss-up about which opinion you follow. And if this be the situation, then I really would like to go along with what Arindam said, that there would be, in principle, a large-scale evasion, but not perhaps willful, but because you do not know what applies and what does not apply. So somehow the tax itself is not clear about what you are subjected to. That's number one. And number two is a very curious thing that I can recall. We are celebrating 10 years of CEPPF, and I remember that the way that the thing started, the idea of why we should have a CEPPF arose because some years in the hoary past, I had Professor Amaresh Bagchi, the late Professor Amaresh Bagchi, who was an expert in the areas of GST. I convinced him to come to Patna. He was very unwell at that point in time. He came to Patna to give a talk on what GST entailed. And he said that, look, I will not go to Bihar, no one is interested in it. I said, look, please come. You'll come. And the only reason he was interested in doing everything is when he walked into the room to give a talk, Professor Ghosh may remember, one of the first persons sitting in the first row was Mr. Sushil Modi with a notebook, noting down religiously what Professor Bagchi was saying. And after that he went back and he said that, look, I think people are interested, so what you should do is start something like a CEPPF. And that was the source. So your paper, I think in some sense, has triggered that off in my memory. And I thought I should share it with all of you. But I think there's still a lot of things which you need to clarify.
Nanda, I just want to point out one thing. One thing I'm very proud, since I learned all my public finance from him, that Amaresh Bagchi had something to do with this, the founding of this center. But to come to your point, every new broad-based tax remains with a number of unsettled issues that gradually gets settled over 4 or 5 years, or maybe sometimes more. So it's not specifically a GST problem, but a problem with having an entirely new piece of legislation where all the issues are not spelt out and which have to be settled by legal challenges.
Well, I think we are close to any other questions. We are close to the end. So thank you, Arindam, for an interesting discussion, and thank you all for participating.
So I request Dr. Sunita Lal to present a memento to Dr. Gupta for his interesting talk. We also would like to thank Professor Mukherji for chairing the session, finishing it well on time. Thank you, sir.
Right, right.